Now, life isn't very static, is it? And neither should your money be. From your first salary to enjoying retirement, new responsibilities and new financial realities come to you all the time. So, why are so many of us sticking to one-size-fits-all investment plans? The truth is, each life stage demands a unique investment strategy. Let's break down why. See, the core idea being time, risk, and goals. How do you allocate between these? Your investment strategy is shaped by these three crucial pillars. Let's look at each in further detail. Firstly, time horizon. How long do you have until you need the money? A longer horizon usually allows for more aggressive growth assets. Secondly, risk tolerance. How much fluctuation can you stomach in your investments? This changes with your responsibilities and financial stability. Lastly and thirdly, coming to financial goals, what are you saving for? Retirement, a home, your child's education, or just wealth creation in general. Your goals dictate your urgency and investment type. Let's look at the first stage of life. The accumulators. So these are your early people in your early 20s and 30s. High risk, high growth is usually how that goes. Welcome to your financial startup phase. In your 20s and early 30s, you typically have a long time horizon, 20, 30 or even 40 years until retirement. You have ideally lower financial responsibilities. Usually, this might not be the case. High potential income growth and crucial, plenty of time to recover from any market downturns and even participate in those. The goal is building an emergency fund, perhaps saving for initial down payment towards the house, or critically starting your retirement fund early. Now, this is your time for aggressive growth. Focus heavily on equity-based investments. Think diversified equity mutual funds and maybe even a little bit of portfolio management schemes or direct stocks if you're comfortable with. The cover of compounding works greatly in your favor. Don't shy away from market volatility as well. View dips as your buying opportunities. Now, coming to stage 2, the balance stage. People in their mid-30s and mid-40s, moderate risk and diversification. Midlife often brings crises more often than not, but expanding families and increasing responsibilities like children's education, repaying your home loan are also a part of the problem. Higher income, but also higher outflows. Time horizon is still significant, but it is reducing. The goal here is creating a child's education fund, accelerating home loan repayment, maybe even buying a second house, continued and increased retirement savings, as well as beginning the process or continuing the process towards wealth creation. This stage calls for usually a balanced approach. While equity should still form a significant portion, start introducing assets like debt, gold, silver, maybe government schemes like Public Provident Fund, maybe Suganya Samriddhi towards your kids, as well as National Pension Scheme. All of these form a portfolio of assets combined with life and health insurance to provide you with proper stability. Moving on to stage 3, the preservers and sustainers. So people in their 50s and people who are above it. As you approach your retirement, the game changes completely. Your wealth creation, your goal, your priority becomes wealth preservation and income generation. Time horizon is short or sometimes non-existent. Risk tolerance is very low or moderate if you can't afford significant losses. The goal is generating a regular, stable income from your corpus, as well as making sure that your other goals like maybe providing for your kids or maybe creating a legacy are equally taken care of. In this stage, prioritize capital safety using assets like debt, maybe a little bit of precious metals also in the portfolio to provide you with a stable income, as well as take advantage of government schemes like Senior Citizens Savings Scheme, Post Office Monthly Income Scheme. These help you provide a monthly and quarterly income, as well as provide you utmost capital guarantee. Your life is a journey, and your investment strategy should be one that is tailored to your own needs. So we at ithought are able to provide you with this unique financial planning and goal-based approach towards modifying your investment based on what your financial goals and your life stages are. So what are you guys waiting for? Reach out to us in the comment section below and we'll be more than happy to connect with you over a call.